Welcome back to the Air Crown Crypto channel. Wishing you a happy and healthy start to this nice little Sunday morning over here from a ever so snowy Helsinki, Finland. And we have a long-term analysis for today as we discuss the very macro case for Bitcoin. Very macro case. What I'm talking about is long-term timeframes is what I'm trying to say. Of course, we'll go over some short-term timeframes as well, although the video from yesterday still will essentially suffice for that. If you want a more in-depth analysis of the short-term timeframes, yesterday's video, again, very much pertinent for that fact. However, we'll briefly touch on it today as well. Why the hell not? And I think that that would be a good start for this one as we get into it. So what I'm going to do is we're actually going to come back to the data here on the Crown Trading application, which, by the way, of course, is 100% free, and you can find it in the link in the description below. And it's actually going to be a focal point of today's analysis as well for many reasons, but we're going to get to it when it actually makes sense. So first and foremost, let's actually go back into the shorter term timeframes over here and talk about Bitcoin on timeframes below basically a daily, of which we won't be mentioning anything other than that in the of course in the well, I guess in the bulk of this video here. But anyways, as far as the general analysis goes, very little change here. Daily is still within the context of a heavy downtrend, and basically as long as that is available, it is hard to be bullish, and there is mostly hopium, of which there are certainly several pieces to be speaking about. But in the short-term timeframes, if we are going to talk about hopium-infused ideas, that would be the fact that we are starting to build up several drives of bullish divergence as we identified yesterday. Actually now plotting one drive of hidden bearish divergence right there. Not great, which probably does imply that we're going to sweep around the current lows, but that's all good in the hood, because as long as Bitcoin is essentially not breaking below our current major level, that being about the $41,000 region, or basically yesterday's low right there on a 4-hour closing basis, I am looking for this one to very likely give another bounce, or at least another try for a bounce, before judging any sort of like major continuation targets to the downside, of which, yes, there are several, or I wouldn't say that there's several, but there's some pretty damn big ones is what I mean to say. So there's certainly a major threat for that. And of course, as long as the daily trend is down, you know, that is a lot more likely to happen, to be fair, as we're going to go over for a few other reasons as well here. So first and foremost, I just want to once again identify all of the drives of bullish divergence. Of course, you see it on here on a 4-hour. I'm sure that all of the other lower term timeframes will have pretty much the same setup as well. You can see right here on the buy hourly if it populates. There you go. Although that will be another drive of hidden bearish divergence right there. Not great. Anyways, up to a 6-hour. Do we have it right here? I believe so. Yes, 1-2 drives coming off of this low and this low, of course. And then if we go all the way up to a 12-hour, it is building there as well. However, not confirmed. So when it comes to the sort of hopium ideas on the shorter term timeframes, understand that they are very much inactionable right now, or at least in the way that I look at things. What would make them actionable? The same criteria as yesterday needs to be met, and that is quite simply just getting back above range highs on your shorter term time frames. So let's actually go to a fresh chart in this particular instance. I'm going to go over here and let's just get rid of everything and talk about only the things that matter most. That's going to be this area right here, obviously at about 42,700 or so. Any sort of a 4-hour delta closure above there, I would be looking for Bitcoin to pop back up somewhere around your just under 44,000 bucks right here. You can even imagine that the 4-hour 55 is going to start to curl around that region as well. And then of course, well, at that point, then you have to be looking at the higher term timeframes, of which we're going to cover a little bit later when we come to our back to the hopium. But for right now, that's kind of all that I'd be looking at for right there. Maybe we could just briefly go down the momentum oscillators as well in the shorter term timeframes, which we'll just bring up right here. 4-hour stochastic is showing what, as far as momentum goes, is going to remain with upside posturing as long as Bitcoin's above 41.33.4 on a 4-hour closing basis. You'll also notice, if you're perceptive, that we have a nice little trend line coming in right around here, and that would be a clean and clear rejection right at the edge of the bearish control zone. So basically, that is to say that if Bitcoin does fail around this region, if you see 4-hour stocks do flop back down around, basically Bitcoin closing below 41,300 would do it in the next 1 or 2 closures, then yeah, that's probably going to be another anticipated move off of the trend line, and very likely comes back down somewhere around the critical zone, and then we come back after that. That very likely implies at minimum a test of the current bottom side of the range, that being just below $41,000. And then, well, you got to hold your breath once again as Bitcoin does prepare for potentially another nasty washout, of which, again, you know, trends all the way up to a 5-day and a weekly are certainly to the downside right now. So there is a good probability of that. Anyways, hourly is already flopping down and will be remaining down as long as below 41,967 or so. And if we go over over here to the medium and higher term time frames, I just want to double check where we at right now. 6 hours going to be showing what? Upside from a very low level, by the way, might I add, as long as we're above 41,150. So that is good. Again, Bitcoin come back down and test around that region. Just don't want to see closures below that region. 12 hours, same thing here as well. We're starting to see it curl up above 41,200. And then obviously, as we identified on the daily yesterday, it's very close. It's very, 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 very close. Wouldn't take much in order to force daily momentum back onto the upside. But just as we went over for like, weeks on end, or I wouldn't say weeks on end, but like 2 or 3 weeks with the daily stochastic momentum, until you get validation of that signal, it's not actionable. And it means it's a phantom. It's a possibility, but it's not actionable. It doesn't mean that it's going to actually happen. So in this case right here, what would force daily momentum back onto the upside, back above 41,300. So you can kind of see the order of operations here. Basically, short term, Bitcoin can very easily play out this range right here. I mean, that doesn't really mean all that much. It's not until Bitcoin gets back above 42,700 on a 4-hour closure where I do look for it to go in and put in another like decent rally back up to the top side of your medium-term time frame range. This one actually does hold weight, that being the let's just call it 43,700 region right here. Above there, I do look for Bitcoin to put in a rally attempt, at least somewhere back around about 45 to 45,500. And that area is particularly significant. The reason being because that is where Bitcoin broke down from just about a week ago. So that does imply that if Bitcoin gets back above there, we would be speaking about potentially a major bear trap in the making, or probably a major bear trap in the making. And we can start to talk about, targets maybe into the low $50,000 territory. So that's it for the short-term timeframes. Other than that, I do want to be very much on the record and very adamant about saying this. One of the focal points of our analysis has been the global open interest. And it makes it very difficult for me to be bullish on this asset, or at least not anticipating another potential washout, as long as we see the global open interest, specifically not around 10 billion, that is. Why is that? Because quite literally, anytime that we've seen the global open interest get above 13 billion with a B for the past year, and we even have more iterations than this, by the way, it has been resolved with downside price action. And of course, that downside price action has then essentially stopped once we saw open interest get at minimum down to about 10 billion, yet again with a B, and preferably lower. Lower is better for the unraveling and sort of resetting of the market, if you will. And in this case right here, we'll just quickly run through this. We see, of course, going back to March of last year, we saw a read up here at about 13.5 billion, and that did precipitate the move before going from about 60,000 down to 50,000 bucks very, very quickly, might I add. And then of course set it up for this next move right here, where Bitcoin got up to its prior all-time highs in open interest and also its all-time highs in price action as well. And what do you know? A major, massive downturn all the way from 65,000 bucks all the way to 30,000 bucks over here. Then more recently, we saw it happen in September before that move from 53 down to $40,000. And then of course at the $69,000 all-time high right here before going down to $40,000 where we're currently at. And here's the thing, while Bitcoin was essentially consolidating for pretty much the whole month of December, actually, we did see open interest once again get above that 13 billion marker. And well, we're still working off those extreme conditions right now. So I really would not be anticipating a major macro low in Bitcoin's case, or not even a macro low, but like a major low. My damn hair is getting in my fucking eyes again. Sorry. Anyways, until we do see that come back down and reset at minimum to like 10 billion, that is. You can also kind of draw a regression from our current lows from summer to September to more recently in December, which, was a low, but not a macro low, that's for sure, as we had a very anemic rally from there, just $6,000, but not within the context of the last few ones, and certainly this one as well, which I did not talk about, but you can assume the same interpretation there. And then so same thing over here. If we go into the hourly data, yeah, it's coming down. We are seeing this unravel. This is good. And this can happen multiple different ways, because I've been getting a lot of questions about this. So yes, I will 100% address this. Okay, so what are you looking for here essentially? Well, what could cause open interest coming off? I need to be very direct in the way that I relate this concept, because for some reason it seems to be confusing. Maybe it's, my own limitations with speaking, but basically it's this. Open interest will come down. Open interest will always come down if leveraged positions are closed. That could be a perpetual position, that could be a futures position, that could be an options position. Anything that is leverage, anything that operates on leverage will force that down if that position is closed, whether that is a manual closure or a liquidation that is forced. Either one of those is treated the same. It is simply just the raw data of open interest. And of course, we did come down, about 1.5 billion from the current highs, which is significant, but still we are just above 12 billion right now with the B yet again. So until that really comes down to about 10 or so, I wouldn't be promoting too much like macro hopium, that is. Here's the thing though, and what I also want to focus on here on the Crown Trading application, and of course you can find it in the link description below. I should also let you know if you're having issues with it loading. A few different things. First and foremost, mobile functionality will be ready, I don't know, either today or tomorrow or the next day, whatever it is. It's very, very soon. It might even be today, or it might have already even happened, but ain't nobody checking on mobile who's serious about this shit. Just kidding. Kind of. Anyways, no, I understand, man. You want to have it on your phone, as do I. Anyways, yes. So where was I? Yes, you have that, and then also for right now, this web app does not work on normal browsers like Brave, for example. You got to use like the Chromes, the Safaris, or I don't know if Safari works either. Probably, maybe, I don't know. I don't use fucking Apple. Jesus Christ, man. Apple people. Enough of that. My girlfriend's an Apple person, actually. She gives me the eye, but you know what? That's her problem. Anyways, Firefox and I don't know, a few other ones like the big name brand ones. Those ones will work. Anyways, if you've done that already, the next thing that you should try, if you're still having difficulty getting the app to load, is press at the same time, very specifically, Control, Shift, and R. And that should fix the issue. If that doesn't fix the issue, then contact Morinfall in the Discord, and you can speak with him. He's usually pretty freely available, but hopefully just don't bother him unless it's like really, really serious and you can't quite literally figure it out. All right, cool. So let's go into this notifications over here. You can actually set alerts on this, and what I want to do today is I want to set an alert for the open interest, actually, because that's going to be rather important. So I want to set first an open interest alert for when it's under 11 billion. Actually, how am I going to represent that? Okay, so billion, that's, oh my God, how many zeros? All right, 1, 2, 3, 4, 5, 6, 7, 8, 9. I think that's actually right. Something like that. Oh, Jesus. Okay, that's actually not going to work. Maybe it does need to be 11.2. Actually, I need to talk to Mournful about that. Maybe I don't know exactly what that's going to be, what that's going to look like. I'm going to put 11 right there, and then also I'm going to get rid of this fear and greed, because obviously that one has already ticked off, or actually we got to 10, but not under 10, to be fair. And then also want to have one for under 10 on open interest as well. Let's go under right there. Okay, beautiful, and save that. That's the one that I'm really looking for. This one is more like a warning. So I'll be keeping a keen eye on that data going onwards and forwards until that really happens. The most likely thing is more of the same, actually. But again, the open interest going down could be a function, and very likely will end up being a function of sellers closing their leverage positions. Short sellers going to be closing their positions most likely. I think that the market's probably destroyed most of the longs thus far. Like the longs have been in enough pain ever since, especially like even like fucking 55,000, right? So fair enough. All right, cool. So we got through that. All good right there. Okay. Now let's talk about, do we want to talk about the bearish case or the bullish case here first? Let's talk about the bearish case first, because it's actually shorter but more potent, which you're probably not going to like. All right, first and foremost, I want to bring this baby back, and bring my baby back ribs. Sorry. I want to talk about the Gaussian channel on the 5-day and the weekly, actually, both of which are getting at some pretty precarious places. The 5-day actually has already confirmed below some pretty precarious places, that being at the median band right here. And just like we saw over the summer, when that criteria was met, we did come back down and obviously retest range lows and bounce from those range lows, to be fair as well. But in general, when you do see a read like that, you are supposed to expect a test somewhere around your bottom side band, which, by the way, is around about $37,000, which is rather interesting because that's going to come up many other times. So please remember that number, put it in the back of your mind's eye. We're going to come back to that one. Same thing on the weekly here as well, obviously. So I don't really need to go over that. And what I now want to talk about is, oh man, should we go over this one? Yeah, we should go over this one as well. I'm going to get rid of the Gaussian channel. I'm going to put these babies back on. And what I also want to talk about is the quarterly here. So this is something that I brought up many times way back on over here once September started, promoting a bit of a short-term downside case. Now, I want to preface this conversation first by saying that on Friday, I believe, hopefully, if everything everything goes, well, Mr. Fiboswani is going to come back onto the channel, and he actually has some really, really insightful and really, really interesting analysis as to why $35,000 or $36,000 is probably going to be one of the big areas to be aware of, at least for a humongous bounce, and if not for anything else, then maybe even a macro low. So I don't want to steal his thunder right there, but I do want to come back to this case over here, where anytime we've seen a quarterly reversal, of which we only have a few in the history of Bitcoin. I mean, kind of have this one over here. It doesn't really count because it's like literally right from the genesis, but right here would be a reversal. 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 And of course, we also have the highs as well, but I think those are rather obvious in this particular chart. Anyways, anytime that we've seen that on the quarterly, so a quarterly reversal, but Bitcoin has always come back down and retested 100% of the time the quarterly reversal open. Okay, so let me explain that. Or just like a backfill on it is what I'm trying to say. So in this case, let me give a few examples. We'll go back to, I guess we can start with this one, right? Here's reversal. Obviously, the next dildo like doesn't just back test it, it shatters it to the downside, right? That's probably just a function of this chart being relatively new at that point. The next more obvious one, or the next more pertinent one, would be this guy right here, actually. Here's a reversal. The next quarterly does come back down and tests around the closure right there. So that would be your backfill. Whereas your next reversal, and also we talk about the highs. I mean, obviously this one does fill the closure right here from this reversal in July 2011, just for what it's worth. Same thing over here, obviously fills that one. Where's the reversal off the downside? That would be on this baby or this baby, depending upon how you kind of look at it. Either one's fine in this case, and they both solidify the same conditions anyways. You do see the actual next quarterly actually come back down and fulfill that region as well, obviously. Same thing over here, fills the open almost, or in this case, immediately. This one over here is where this interpretation becomes a lot more interesting to me, actually. So you do see a reversal in January 2019 on the macro cycle low. Very interesting. Do you fill it on the next one? No, actually you don't. Where do you fill it, in fact? I'll give you 1 second to point out on the chart. Show me on the chart where the barrels touched you. That would be right here, actually. That would be right here. And where is right here? That is, that is on the March 2020 flu dump. And you'll notice that the low of this dildo at 38.80 is exactly pretty much where you opened this one over here, to a small degree of error. It doesn't need to be exact, but close enough is close enough. Obviously, this reversal was filled immediately right here to the upside right here. And then what's our most recent reversal? That would be coming off of this low right here, obviously. And where's the open on this one? $35,000. So anywhere around there is fair game. And yes, we could very easily get a wick somewhere down around that region, maybe even 37, which we're going to come back to, like I said. So put that number in the back of your mind's eye. And yes, 37 at this point is close enough in this case. I mean, $2,000 on like a $40,000 name. It's like what, a 5% move? It's not that much anymore, to be fair. Anyways, let me take a sip of this water and then we'll get on with the rest of this explanation. So while that would kind of accompany the more short-term bearish case, that would actually be still macro good. I mean, because that is essentially the point of maximum financial opportunity for these macro reversals, just for what it's worth. And I also forgot to talk about continuation conditions. I mean, we only spoke about bounce conditions, even though they're not necessarily fully solidified just yet. But what would indicate a continuation condition here to the downside? If we see any sort of a higher term time frame closure below the 4th December wick low right here, that'll do it for me. And yes, I would be looking at the next area somewhere around 37 or 38,000 bucks, just coming in from this little starter step right here on price action. Probably going to get at least a few bids somewhere around that region. So do keep that in mind. Okay, cool. So we got through that. The next portion of the bearish case here is obviously going to be a big one. And that, of course, is the accumulation distribution indicator right here. It's not necessarily how do I explain this? It's not necessarily it is. I mean, it is bearish. I mean, as long as this thing is downside angled, this is distribution, and it's unlikely, or at least it hasn't been historically relevant, to be looking for reversals to new all-time highs anytime soon until we see this one get obviously a positive slope. And then two, here's the thing, and here's what's a little more sombering, is that anytime that we have come off of highs like this on the upside, the upsloped reads, it hasn't been resolved until coming down until, you know, like the very, very low reads right here in the red, technically speaking. So, you know, fair enough. And you can draw a bit of a regression there, and that would be kind of postulating somewhere around here. If that is going to hold to fruition, which I don't really have a strong opinion of. I think that it kind of just works like this naturally. But ultimately, what I also want to present with this is that even on a flip of the slope, so in this case it is to the downside, and anytime it's been to the downside, you know, those have been your macro downside markets, obviously. I should probably, you know, back this alongside you as well, but basically, you know, coming off of, we can go all the way back actually to the genesis, you know, gets a downward slope right here. That's your first major massive downside market from 2011. Gets an upward slope right here. That's essentially your higher low before going all the way from, like, you know, $5 to $1,100, not bad, actually. And then you get another slope change literally right after the high of 2013 in November, and that brings you all the way down to your cycle lows in August 2015, flips up right here. That leads you all the way from 200 to 20,000 actually along the way. And then of course we get another negative slope in February, March of 2018. The rest is history until about January 2019. Again, another cycle low right there. Flips all the way up until basically the flu dump times over here. And what's very interesting to me about this particular one, is that you'll notice the slope changes in January to February, 1 month before the actual dump-ola party. So it actually did judge that in the quickest manner compared to or anything else that I'm actually aware of. So I thought that that was rather interesting. Anyways, gets a positive slope 1 month after the recovery right here in May 2020, before going all the way from 85 to 60, you know, thousand plus. And then more recently, we've gotten a downside slope basically ever since July, August, which actually Bitcoin did go up during that time. But as you can see, like, we're not in a macro bull market at that point. It's been flipping down, which essentially is suggesting that this whole price action right here has been distribution, which, you know, makes sense, right? And until we do see this get a positive slope, it's just not wise to be looking for any sort of prolonged macro monthly upside price action. In this case, you know, I look at this as one massive consolidation, which again will come up a little bit later as well. But I think that that's really, really pertinent information here. Anyways, for what it's worth, also, anytime that we have seen a slope change to the upside, Bitcoin has not tested or even made new all-time highs, at least for, I think, like on average 6 months. But for example, you know, you have this one in May 2020, right? When does Bitcoin test its all-time highs after that? Well, it goes all the way from May to on like a closing basis November, so that's quite some time. This one over here obviously doesn't really, you know, test it again until like a year later. Then again, I mean, you could say over the next few months, like, it tests it on a wick basis to the closing highs. Okay, you know, fair enough. But still, that is, you know, 1, 2, 3, 4, 5 months after the fact. Same thing over here, coming off the lows from 2015, doesn't test the all-time highs from August until basically over here. And that would be January 2017. So quite some time after that. Same thing over here, you know, taking a lot of time. So I do think that this market is going sideways at best for a while from here. That's not like a bad thing by any stretch of the imagination, but I just want to kind of temper some expectations in this market that, hey, sideways between 30,000 and 70,000 bucks is okay for the long-term macro bulls. For the over-leveraged short-term traders, yeah, you're fucked. Sorry, you're fucked, sir and zer, with respect. But yeah, you know, it's going to be rather painful, I do suspect. So, you know, tempering some expectations here. It's just, historically speaking, very unlikely to see something like that happen. All right, the next thing that I want to talk about here is kind of like, is half bullish, half bearish. Depending upon your disposition, depending upon how far out you are, right? Okay, so what am I talking about? I'm talking about, quite specifically, the hash ribbons indicator signal. So this is like kind of bullish, kind of bearish, right? The reason why I'm calling this one out is because it gives us yet another point of confluence that the $37,000 to $38,000 region is an area of hot contention. And if we look for this relationship to hold true over the genesis of history, or the totality of history, we found that of 18 signals, all 17 but one of those signals has played out in the exact same fashion, which is incredibly powerful to someone like myself who believes, you know, basically only in statistics, as that's really the only edge that you can have in trading land. And what is it? Well, anytime that we've had a blue buy signal, as you can see on this hash ribbons indicator, the daily low prior to that blue buy signal has been the low before never, you know, going below there ever again on a daily closing basis. That does not mean that we can't, sorry, coffee coming up. That does not mean that Bitcoin cannot come back down and wick around that region. wick off that region, if you will. But for example, right here, you have your blue buy signal. Okay, where's your daily low prior to that blue buy signal? That would be right here at 17,000. Yeah, Bitcoin comes back down around it. That's fine. But obviously, ever since then, Bitcoin's never closed below there ever again on a daily. Doesn't mean that it can't, but unlikely, I would say. The time before that was over here in July 2020. And where's your daily low prior to that? That would be right here. Does Bitcoin come back down around there? Yeah, even wicks exactly to it a few times. That's fine. No closures below, and the rest is history. Bitcoin goes sideways, Bitcoin goes up into the right from there for basically eternity. One before that, same thing over here. Blue buy signal right here. Daily low prior to that would be right here. Obviously, Bitcoin never goes below the 60-ish region ever again. The only iteration that did fail is actually this one right here. Here's your blue buy on the Hashimoto's indicator in December 2019. Here's your daily low prior to that. Obviously closes well below that in the flu dump of March 2020. So please understand that just because something has a really high hit rate doesn't mean that it's infallible. It just means that, black swans do happen and 10 sigma events will naturally happen over time. And doesn't mean that we can't have another one again. They're just very low probability. So I implore you to go and, I encourage you to go back and retest that all by yourself. But, if you just want to trust my analysis, well, there you go. Anyways, the reason why I'm calling this out is because the last blue buy signal that we had, thus setting in theoretically a major base on price action, is right here from the 7th or 8th of August, actually 7th of August, in fact. And your daily low prior to that on Bitcoin was 37,500. That is eerily around the $35,000 quarterly backfill. That is eerily down around the 5-day Gaussian bottom side channel. And that is, that is just, I just thought that was interesting. I thought I was going to say something more profound. Well, I don't have anything more than that. Look, it's either interesting to you or it's not. But in this case, I do happen to believe that will hold some weight here. So again, Bitcoin can get a wick down to, 35, 34,000 bucks, whatever the fuck. Just don't want to see a closure below that level. And also within that region as well, what I should probably call out here is, of course, the last major CME gap on the daily, basically between about $33,000 and $34,000 respectively. And now there actually should be a discount on futures relative to spot price action. So you can imagine at some point there's probably be, maybe like a few $100 discount. Anyways, it would imply that if we are going to fill that gap, or if Bitcoin's going to fill that gap, then you're probably going to see spot price action, base a little bit higher than that, which is fine. Anyways, just wanted to kind of lay that out because that's, it's in a macro sense, kind of bullish, I guess, but in a micro sense, not, because obviously, Bitcoin can come down another 10%, 10, 15%. Let me just double check this right here. Where are we at right now? Yeah, that'd be like 11% to the last hash ribbons buy signal. Lower than that to the gap is like 20% actually. So it might, could it be something like this where you have like a quick and somewhat painful move to the downside and then V bottom out of there? Maybe, possible. But ultimately, understand that, again, all higher term time frames to the downside or up to the 5-day and a weekly. And even those ones are going to come into a bit of nastiness here as well as we come into the weekly closure, because the weekly closure is potentially going to give us a lower low right here. If we do close below, or if Bitcoin closes below about $41,000 or so, just anywhere below this last wick low right here, 41,600 actually would probably be pretty damn bad, or just a little bit lower. Let's just say 41, just easier to say. And well, might as well go with a round even number. Now, I'm sure people are calling this a head and shoulders right here. It is. It is. There is a lot of validity to that, and there is an implied target to be made off of that as well, which we can certainly do, which we can certainly apply, and that would be pointed down towards a targeted region of about 20,000 to maybe even 17,000, somewhere down around here to be fair. Here's the thing, and as we start to construct maybe somewhat of a hopium-infused case here, would be this. So let's go back on over here and let's pull this out as what is that's exactly what you should do when you're in doubt. And what I want to talk about here is that when we do have a head and shoulders like this, a reversal formation on the macro scale, that is, kind of see the neckline right here. In fact, you'd even argue that it's probably already broken for what it's worth in this case, and you can make an implied target on that, which we already did. Well, there's also a failure target to be made as well. This is in the case of, well, in the case of a failure, like obviously I don't know where I'm going with that statement, but basically there is a somewhat bullish interpretation of this to be made. However, it is in no way, shape, or form confirmed anytime soon. And as we spoke about on the short-term timeframes, even they have a shit ton of work to do before this is even a topic conversation. So we're talking, maybe very well far down the road right now. But if Bitcoin were to pop back up and take out, just trade above what would be your right shoulder, in this case, that's your $52,000 region right here, then you could actually apply that measure move all the way above there, and that would have a targeted region somewhere around like $77,000 to $80,000 or so. So fair enough. But again, the order of operations here, I mean, shit, like even for the short-term timeframes, they got a lot of work to do. Like at minimum 42.5 is like a major area. And then even above there, it doesn't really do much for even the medium-term timeframes until you're back above about this little swing high, right? Or this little rejective high right here, which is 43.7. At that point, yeah, we start talking about targets back up towards 45.5 to $46,000. Then above there, well, you're probably going to see another range test of this region, which, at that point, it's going to start to look a lot better. So please do understand that and understand that it's very, 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 very far away. Now, I also want to talk, now let's kind of start to bring up the bullish case here. So the bullish case is not for the micro or the short, the short, medium, or any of those lower term timeframes. It's for the macro here is what it is. And what is it essentially? Well, it's essentially looking at this as one massive macro consolidation in the format of what would be an ascending triangle, which would imply that Bitcoin actually does not break down around here. Because obviously if it does come, a little bit lower towards, well, I mean, even $37,000 could probably still do it right here. Yeah, that would be okay. But a little bit lower than that, it starts to really be destroyed, obviously. And then at that point, you probably are looking at targets down to like 20,000 to be fair. But for right now, does still hold in there, which is okay, which is a little bit of a glimmer of hope I do expect for right now. And the reason why I still look at this as one massive macro consolidation is because that is what our volume and volatility indicators are suggesting, which are the best ones for judging something like that. So first and foremost, we have our volume indicators right here. You can see that we do see a tailing off of left to right on the volume signature. If we just draw a regression, or if we go to a chart that's a little more reasonable, like where is my, yeah, here we go, stamp. You can see a very obvious tailing off right here with an apex on the volume signature coming in around May, which would imply a break somewhere around February, actually. Anyways, that would be implicative that this is one massive consolidation. And for right now, we do still have higher lows on that consolidation as we do have higher highs, both very important things. Anyways, if we go over to weekly volatility, you can see that volatility has actually crunched all the way back down to our summer lows. In fact, just right around there. So that is obviously, an indication that we are consolidating as well. And the monthly, which represents, obviously the super macro for this asset, is also having a similar sort of read to this. As we do go into the new year, we got one more tick to the downside right here. We are now very comparable to what we saw not last year, but in 2020, coming off of the lows from March, actually. And you can see right here, if we go to a more long-running chart, that all of the low volatility reads over the course of Bitcoin's history have actually been met with upside reversals, in fact. So I'll bring you to this last one over here. This was 2020 from June, was like the low of the low. And you'll notice that things didn't really start to change around until the BBWP indicator itself got above the moving average, just for what it's worth, which right now we're nowhere fucking near. So again, this is not happening anytime soon. But that, obviously did precipitate this whole reversal here from about 9,000 to, 65,000. The time before that was coming off of the 2019 lows right here. Obviously Bitcoin regains the moving average on this one. And then, the rest is history as Bitcoin puts in a rally from about 3,100 lows to $14,000 highs. Time before that, and the only time before that really, is coming off of the 2014, 2015 cycle down here. Again, volatility gets above the moving average on this one, and the rest is history from 200 to 20,000 over the next few years, actually. So I thought that was rather interesting. On top of that, as long as Bitcoin on the monthly is not closing below the last local low, which is about $35,000 on a monthly closing basis, we will naturally see hidden bullish evidence form here. In fact, as your last low is right here, so obviously making lower lows on monthly RSI would be, well, hidden bullish evidence in the context of a higher low structure, which we don't have a low just yet right here, obviously. And to balance that statement out, we did have bearish divergence on the top right there. And bearish divergence, at least of like that, which this is like not a great example of it. Like this is not the best one right here, to be fair. But at minimum, you're going to test the 9 exponential, which is, the cyan line right here. And I think it would be a bit more of a stretch, but hey, there is some validity to this. The 21 is usually my target off of like 2 good drives or especially 3 drives, sometimes even the 55. And in this case, whereas the yellow 21 come in around, you fucking guessed it, man, right above $37,000 or right around $37,000. So a lot of things coming in around that region. If Bitcoin does get down around there, I, at minimum, am looking for a humongous bounce. I'm not looking for that move to particularly happen until Bitcoin closes below its current 4th of December wick lows on at, realistically like a higher term time frame, but maybe a 12-hour will do it as well. Probably does do it. I mean, you start seeing a lot of volume being done at the lows right here. So it's probably, Bitcoin's more likely to bounce from this region again, to be quite honest with you. But hey, bounce is not the same thing as reversal. Reversal talk ain't happening until at minimum, Bitcoin's back above like 45.5, maybe more like 46. Until then, it's only short-term time frame ups and downs here, or ups and downs are, can obviously be catastrophic. All right, let me just go back through my my notes here. Let me take another sippy sip of this because we got more to do, baby. We got more to fucking do, and we're only 34 minutes into this video. Holy shit. Okay. So this is another really interesting thing that I've been kind of looking at. Now, I'm not a humongous fan of this term. I'm gonna use the F word, the fucking fractal word. The problem with fractals is that a lot of the time, or kind of like my introduction to them was mostly just people in 2018 just like posting every fucking fractal from the prior year to suggest that Bitcoin's gonna go to the moon and beyond, which was just like, and I'm not saying this to be like mean, but it's just like the most fucking obvious thing that this was just like a nasty, really, really nasty downtrend over here, and no fractal is going to save that shit. But in this case right here, there are a few points of interest between our summer lows on Bitcoin and potentially these lows over here. From a price action standpoint, very, very similar price action, obviously coming off the highs, very aggressively. And obviously, obviously playing out a very similar formation over here, where you get that first wick down in May, you come back down and retest it over here, ever so slightly, by the way, which we've done exactly right here, without closing below it, to be fair. Or did we actually close below it? No, we did not. All right, yeah, beautiful. All right, anyway, still holds to fruition, so all good right there. And then obviously, we get an anemic rally back up to the 21, slink back on over and test it again. I thought that was interesting on price action. Not that I'm a humongous fan of fractals on price action, but you also notice, if you go over here into the market data tab on the app and go to indicators, apologies, you'll notice that the fear and greed index representing sentiment is essentially a fractal of what we saw over the summer as well. Now down into the extreme fearful zone. Now I do understand that it did pop up today to like a 20 read. Regardless of that, we saw it kind of stick around there for about 2 to 2.5 months, I believe. Yeah, started in May and then worked its way out in May, June, July. Yeah. July. That's what I'm looking for. So about 3 months. In this case, we really started to get down there in late November, early December. Now it's been a month, so this can take some more time. I do think best case scenario, Bitcoin takes a long time, kind of grinding out this area right here. Might put in another rally like this, perhaps. Go like that, come back down, boom, 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 and then maybe up. That would be like the most hopium-infused idea right there. But I do think that there is, that's probably what it'd look like if that's going to hold to fruition, to be fair. So fair enough. I'm going to leave the LARP lines in there for right now, and let's go over a few other things. So what I also did here, let me just get rid of this for a second as it'll make it a little bit easier to look at, is I put in a Fibonacci retracement of the whole macro structure. And you'll notice that Bitcoin has thus far bottomed out, found its lows at the 618 Fibonacci retracement, aka the golden zone, right? And at minimum, you're probably going to find some nice bounces around that region. I think we kind of already saw that actually in December. But, a lot of the time you will find some major lows in that region as well. Just as an aside, I thought that was interesting right there. Now, what else do we have? Okay, let me just go through the thingies right now. Yes, we also do have this weekly trend line on RSI, and I want to give a shout out to Mr. Gritters of the Discord because he actually pointed this one out to me. I did not find this one myself, so I can't claim what's it called? Victory here, but basically we're right down around this trend line on the weekly RSI that has gotten the lows from December 2018. So that would be your $3,100 macro cycle lows, the March 2020 flu dump lows right here, and then perhaps on the next ticks we will find this low over here as well. Problem is, if that does fulfill that trend line test, Bitcoin's at minimum going to give one more try to the downside. Doesn't mean it will close to further to the downside, but it will try down around there. And actually, I can verify exactly what price action would need in order to test that region. So it would need to continue to fall below. Yeah, so as long as Bitcoin's below 47,300 on a weekly closing basis, the RSI will continue to fall here. So it will be around that region actually, unless if Bitcoin gets like a $6,000 move today. So there you go. Anyways, okay, we got that. All right, and we'll end on this. I think that this is, as always, very interesting here. Okay, so also representing the macro is, of course, this chart, the Bitcoin law of curves chart, which, if we take everything off, has a pretty, whoopsies, done goofed, which has a pretty, self-explanatory relationship here. Basically, Bitcoin finds its macro cycle lows in the green zone, it finds its mid-cycle consolidations in the yellow zone, and it finds its cycle highs typically in, or not typically, it has always found them in the red zone here. So we have 1, 2, 3 representing 3 cycles. We have many moves into the green zone, which have always been, phenomenal buys long-term, to be fair. Anyways, what I really want to focus on is the relationship between what we see over here in March 2013 on this mid-cycle consolidation between what we see over here. Same thing. Very, very similar interpretation. Yes, it's obviously dipping below that right now. That's okay. It doesn't need to be exact. It's more of a, it's more of like a regression in this case. I mean, it's a fucking log curve. Anyways, what I've also done here is I put on some formations. As you can see, we have a base, a macro base of in the green zone in the format of an ascending triangle. Well, same thing over here. The whole damn 3 years, right? Your mid-cycle consolidation thus far, or at least for 2013, was another ascending triangle right there. Beautiful. Well, what do we have going on right here? Thus far, it still is. Thus far, it still is. That's going to go about the wayside real fucking fast, though. Bitcoin closes basically anywhere below about 40 to 41,000 bucks here by end of day, 7 p.m. Eastern time. Anyways, you'll notice throughout the mid-cycle correction, we have a high of about the 1.618 Fibonacci extension from the base, and we have a low at the 1.272, and the final correction does have a spike directly down to the 1.414 right fucking here. Well, let's go to our current price action over here. Consolidation lows, the 1.272 thus far, 30,000. Cycle high, or sorry, consolidation highs right around the 1.618. And where is our current correction coming down to? The 1.414, exactly right here. So putting all of the puzzle pieces together, do I think that this area is of the utmost importance? Yes. Does it mean anything that Bitcoin, or does it mean anything on its own? I mean, it does have a little bit of meaning on its own, but Bitcoin now needs to actually, follow through with price action. So first and foremost, lower term timeframes, like, they're probably setting up for a bounce here, to be fair, but maybe one more swipe of the lows, might be something like this, kind of similar to yesterday. We get a quick move down, painless, and then, zoom it back up and put in a bounce. Bounces are completely unimpressive for any higher term timeframes, especially as long as you are below 43.6 or 43.700 right here, even on a 4-hour delta closure, even on an hourly closure in this case. Above there, things start to be a little bit more interesting for the BULAs with price action implied back up somewhere around about $45,500 to $46,000. That's where Bitcoin does start to actually do something different from a structural standpoint. Let me just take this off right here. And you can see that was your prior base and breakdown. Back above there, I do look for Bitcoin to retest around $51,000, $52,000 highs from December. And at that point, could Bitcoin initiate the biggest hopium possible right now with a failure head and shoulders target to the upside to $77,000 to $80,000? Yes. Until then, well, let the trend be your friend, and hopefully this was in some way helpful. Another 42-minute video. Don't mean to talk your head off on this one, but just wanted to make sure that I get my best analysis out on a day like today. Yeah, I'm feeling a little bit under the weather. I do appreciate the well wishes, man. That was really, really nice and really, really sweet of a lot of people. Thank you for that. But I'm all good, man. It's just a little bit of a flu. It'll come and go for me. No problem. I understand that it's not that for everyone. I'm not saying that it's not. There's gonna be some comments like that. I'm just saying you don't need to worry about me, man. It's all good. So yeah. Just wanted to get my thoughts out on this video and just have something here for the long term, and thus far Bitcoin has still failed to really take out these 4th of December wick lows, which was the focal point of my analyses for the last month. So doesn't mean that I can't, just fiscally speaking and kind of putting all the puzzle pieces together. Well, I suppose we'll leave it right there. We'll let time tell. And with that said, I hope this one serves you well. Take care. And until next time.